Hello traders, how are you? Good weekend and wonderful trading week to all. My name is Vladimir Ribakov from Traders Academy Club, and this is the weekly Forex market review for the week starting on 15th of October, the 20th of October. Previous week was very interesting week with tons of trading opportunities, which paid us very well. If you have watched my previous weekly review, you should see some really good opportunities on the instruments we have analyzed, and they paid us very well. The question is what's coming this week. There are several setups that we need to pay attention to because, well, the moves might happen any moment. It could start now, it could start in a week later, but it's warming up, and these instruments are here to prepare the next trading setups and to provide the next trading opportunities. So before we go over the charts and the setups, let's go over the fundamental events that we need to pay attention to this week, and that might be game changers for some of the pairs. So let's go to the site. Here we go. That's what we have here. It starts tomorrow, Sunday, and we have a speech from Kuroda, followed by a speech from the Federal Reserve, Miss Helene. Then we have the CPI in New Zealand, which I would pay attention to simply because it might be kind of a hint, maybe, for the next future rate decisions in New Zealand. The expectations are to 0.4. Now, if we go to the history, we can see that this is kind of a normal level, right? So if we start to go on the historical rates, we can see that on many of the past numbers, right, past results, the forecast was wrong and the actual number surprised, if it's to the good side, if it's to the bad side. And this is exactly what we can expect this week as well, and that could be very serious mover to the New Zealandian and the New Zealandian pairs. Okay, so I would pay attention to this one, of course. 0.4 or higher could boost up the New Zealandian currency and bring some volatility, and the vice versa. 0.4 and lower could wake up the bears of the New Zealandian. We have the monetary policy in Australia, CPI in Britain, same story. Previous report, previous release showed 2.9. That was much more than expected. That's why the pound fly all the way to 136. Since then, it managed to correct. Now we expect 3. Historically, we also can see that on the majority of the calls, the reality number turned to be different than the expectation. So it's kind of one of the most important events to the pair. We have a speech follow-up in Tuesday by Carney in Britain. Speech from Draghi, average earnings in Britain on Wednesday, build permits and crude oil investors in the US, unemployment rate and employment change in Australia. And this is the main event from my point of view, besides the CPIs in both pound and New Zealand, and that's the GDP in China and the industrial production. These two could be very effective on the Pacific pairs this week, with the Aussie as the main one. The expectation numbers are not too bad, especially in the industrial production. From reality, that's where we need to pay attention to. And previous expectation was 6, actually was 6.6, actually was 6. Before that, the expectation was 7.1, it turned to be 6.4. We can see the intervals of changes historically also big, and have big. It might have big impact on the Pacific pairs. Retail sales in Britain, unemployment claims in the US, and the CPI, another critical one in Canada, which is more than worth it to pay attention to. And the final call would be the speech from Yellen on Friday. So that's what we expect this week. Now, let's back to the charts. And if we go to the charts now, let's start with the euro dollar. This one is very, very interesting. Why? Because this pair, as we started to analyze on the previous week, this one has two options. Option number one is, as I explained in the previous week and weeks, this could be the case. And I believe it might be the case on the future run. The biggest question is it going to happen from here, or are we going to get one more leg down and then one more rally? And I tend to believe that's what's going to happen. We drop to the daily chart. We can see there is a head and shoulders on the euro dollar, right? With current shoulders on the same level, which is 50% of the entire movement. Pretty serious call. On the 4-hour chart, we had triple cycle down, 1, 2, 3, and a move up. Now, by ideal, we need 2 waves up in order to sell. So 1, 2, or a range. And then we can look for the sell opportunities. So this pair could start to be very interesting. Now, what happened last... let's go back to the numbers. What happened last Friday was that the CPI in the US turned to be 0.5 when the expectations were to the 0.6, while the core CPI dropped to 0.1. That's what immediately killed the dollar, especially versus the Pacifics, who suffered mainly, and the yen, of course, who suffered mainly versus the dollar. And that's once again a proof why the CPI is so critical to the pairs. It affects the immediate expectation from the investors and the traders of the next interest rate decision. So the euro dollar could definitely, as long as this low holds, provide us something like this. But from that zone, I would be looking for possible sell opportunities again. Because basically from current zone to these highs, I will be looking for the sell zone, for sell opportunities, sell evidences, and the reason for that is because of the weekly cycle and the daily cycle combination. If we fight here, but at the end go above it and hold above it, I believe the euro dollar starts then all the way up to 124, 125 zone. As per dates, the euro dollar has a top here, that's 12. We have 11 as a very powerful day, so that might be the case. If it pushes higher, we have 17s, 19s. That this is actually the next week. So if we just cross here above, there is a good chance we are going to deal with one more push to the upside, as I showed before here on the short term. Something like that, or some kind of a range here, and try to do this one more push. That's a very good chance for that, but every 2 waves up, I will be looking for longer term sell opportunities. So short term, we can look for these rallies. Long term, every rally should be as a sell opportunity. That's at least from my point of view. Let's continue, guys. Now, in terms of levels, the euro dollar has a very serious zone here on the daily chart, and the 4-hour chart is pretty narrow, as you can see. 1-hour chart as well. It's pretty narrow range for us to trade. Break above it, and you can see the next levels where we have it. Okay. Next one is the pound dollar, and this one I would pay attention to mainly because of the CPI coming this week and a speech from Carney. According to weekly cycle, we should expect higher highs, but there was a triple cycle down, kind of ugly, but still which means we can get it one more low here before we go higher. Dropping to the daily chart, we can see basically nothing. The only thing we can see here, some trend line from the bottoms here and some trend line from the bottoms here. Both suggest that there is a good chance for one more visit there. Now if we go to the 4-hour chart, 4-hour chart suggested us triple cycle down, which was here. Sorry. 1, 2, 3. And now double cycle up. So from my point of view, this becomes as a classical critical zone for sell. For one bigger leg down, 129 down to 127 could definitely be good zones. Or we can go to the extensions of the Fibonacci and look where will we get the extension to. Okay, this is 129 and the full duplication 127. This is why I suggested this zone. Now the best thing to do on such cases would be to see if we manage to break below this corrective cycle, because it's currently corrective to the upside, right? If we manage to go below and hold below, so not just false breaking the trend line and then flying again. So if it goes below the trend line and holds below the trend line, manage to hold for several candles for real, and doesn't close above, every pullback in 2 waves, we can start looking for the sell opportunities, aiming these suggested numbers on the bottom. Bad CPI, and we go there, good CPI, and then this zone that I suggested before could fail. And like with the euro dollar, if we go above it and hold above it, it becomes to be a supportive zone, and then we are going higher, and higher means in terms of levels of the weekly cycle 140 and then 145. That's for the pound dollar. Start to pay attention to that, guys. It's very, very interesting. I believe action to come this week. If the top was created already, it could be very, very powerful, as we have 13, right? 12, 13, and we have 11, which is 2 days ago. Powerful day. If it's climbing higher and doesn't break the trend line, so basically in other simple words, as long as it didn't break the trend line, the bulls are here, right? If it breaks the trend line and holds below as suggested, then bears are back into play. As long as it didn't happen, pound dollar can climb all the way to the next important levels, and we have only 18 and 19, which means full, possibly bullish week if the CPI does not disappoint us. Okay, if it will, it could crash. If it doesn't disappoint us, we have all the evidences for buys, and then every little pullback is a buy opportunity for the pound dollar. Okay, here we go. By the way, a second, my camera here. Camera is freezing for a few seconds. Okay, let's see that. By the way, I want to show, where is that? Here, the pound dollar on the Scorpio. Now, we spoke about a triple cycle down, which we got here, 1, 2, 3. Now take a look on this bounce here. How classical this call is. We have ourselves 4 Scorpios count. We have ourselves amazing trend to follow, and we have ourselves action zone. It cannot be better, especially on these moves. And the Scorpio suggests here this entry when the MFD indicator switches, and you can see how beautifully here we rally to the upside. So there's enough reasons to enjoy these buys here. And now again we can see these action zones, which we need to pay attention to. As I suggested, break below this trend line could start to turn around the things. Pay attention. It's interesting. It's happening. Let's see if we can trade it. Next one, euro versus the pound. Now this pair for a long view, my view does not change here. Now I want to be very specific here. We got this triple up, so I expect at least down of the range here. It might take time, it might go ugly, but from my point of view, as long as this stop holds, we are bearish. If this stop would be broken, we are going to 0.97 zone most likely. But as for now, as long as it holds, I look bearish. Daily chart gave us triple cycle, a special cycle. Here it was the 4-hour chart mainly, and then double cycle up. Here you can see that better. Okay. This, and then double cycle up. We broke the trend line, and now we break this last low. So we can summarize that we have lower risk now. This is a critical zone for us. As long as it holds that, we are looking for sell opportunities. So basically every rally here could provide sell opportunity. If we break above that, then we are going for bigger too. And then we need the break of this trend line to resell. Okay, so this is definitely very interesting opportunity. And again, many things would depend on the CPI and the CPI in Britain and the speech of Carney and the speech from Draghi this week as well. Eyes on it, guys. It's really one good opportunity. In terms of levels, we had a bounce here, and we had a bounce on 12, while 13, 14 suggest this stop, and it happened classically. We always have day before, day after as a zone. You can see yourself. Statistics in play once again. In terms of important levels, we have these two in play we need to follow. We also have this Scorpio in play, 1, 2, 3, 4, which is suggesting nice opportunity. This is the initial protection here. Sorry, here. Now we are trailing it, so the protection is now here. Okay, the original entry is on this place. Okay, that's if it's about to continue lower, it could provide an amazing ride. Let's see what do we have during the week. It's now too early to judge and decide. Next one on the list, dollar versus the yen. This pair, it was sugar for us, provided us nice opportunity. We were bearish this week after the break of this low, and look how well it performed for us. This is what we call classical setup. We had a move down, we have the lower lows, we had a corrective cycle up in terms of range, we got a breakout, and this breakout provides us already 1 to 2 risk reward. Now for the dollar yen, there are a few things we need to pay attention to. This is the big range. Now this was a triple cycle on the dollar yen, triple descending, that was the case, and we had one false break, two false breaks, and lower lows finally. And in that place and in that case, we expect this zone. This is the critical zone. Now why do I say critical zone? Because from here there is a chance bearish game is over and we're gonna fly, especially after the speech of Kuroda and Yelin. That could be very effective. If we break this zone and hold below, we are going to the bottom of the daily range. Remember, I marked for you the bottom of the daily range here. And then, who knows, maybe this is the beginning of this, which will not surprise me. Okay, maybe this is the beginning of a full duplication towards 104, or even the 161.8, which is currently so far away, right? But more than possible. Why more than possible? Because if we take this special cycle we had on the weekly, this is the 50% zone. And if we take this duplication, this is a full duplication zone. So if the bears are going to take the control, it's going to be massive, and it could provide unlimited, theoretically unlimited amount of pips. to the downside. But we first of all need to continue the momentum down, and our current invalidation zone, invalidation view for the bearish expectation would be actually here, this critical zone. So as long as we are below, I would enlarge it a bit and make it this like a zone here. As long as we are below this area, bearish view remains on. If we go above this area, then the dollar yen most likely is trying to tell us the story that we are for another push to the upside, and then the view switches bullish and we would expect 119 as the next target. Dollar yen is definitely very interesting pair. Euro yen, same story, but now this one is very interesting. This pair had an amazing bank zone right here. This was a fantastic bank zone. Now look what happened here this week, this very week. The first visit here 2 weeks ago bounced, boom. The second bounce here was exactly to the same place, and boom. Now the euro yen suggests triple cycle down. It's ugly, but it's correct. It's kind of what we have. If we get 2 waves up and then a breakout down below the trend line, it is an opportunity that we cannot say not to, because if the bears take the control from this zone, look what targets we can have, guys. This is the triple cycle we have. We can go all the way down to, first of all here, this is 130, and then 127 down to 124. How amazing it is. And of course, we cannot forget the weekly cycle. And then that's where we can go even more serious. So the bearish chances here are amazing, and we need to pay attention if we get this beautiful setup there. Now in terms of levels, take a look, guys. What was the suggested top? 11. Exactly where we got the 11 on the statistics. Statistics make a huge difference for us. And of course, if we go and see the Scorpios, for example, we can see that we got some action zones in play here. But this is the count: 1, 2, 3, 4. Why I don't count this? Because they are all inner. All these patterns are inside these two. So it's of course irrelevant. So we have 1, 2, 3, 4 equal legs. This where came our signal in play. And you are the evidence for the bearish call here. Looks amazing, of course, in terms of the cycles, and it's paying, and the potential here is amazing. So as long as the scenario I suggested holds, we are bearish. If we break above the bank zone that I just showed you guys, then there is a great chance that the euro yen is going to 139, 137, 139, which is this level, 161.8 of this cycle, and then bigger triple on the second leg. 1, 2, 3. That's definitely a possibility. Let's see who takes the control, bulls or bears from here. Pound yen. Where is it? Here. On a previous week, we suggested that we might start to see double wave correction, and we did. Exactly like with the pound dollar, we need to go below the trend line and lower lows, and then we can look to sell rallies. As long as the trend line does not break and we don't have lower lows, pound yen can technically continue to rally. In terms of targets to the bearish side, we have the double cycle here, who suggests for us the 38.2 around 142. And of course we have this special cycle from the 4-hour chart with the 50%, that's 146 zone. Okay, that would be the two targets. OZN, beautiful movement, and now we need to start to pay attention to 1, 2, 3, correction to the upside, and same story, trend line, lower lows. If we break the trend line, we get lower lows, we are looking to sell rallies. As long as we didn't, the climb can continue higher, because technically, for the long run, we still have this potential cycle here and here, still in play, still valid if the bullish control will continue. So for the bearish view, we have all the evidences, all the reasons. We have triple down, double up, we need a breakout. We have it, we hold it, bearish. We don't have it, we don't hold it, bullish. It's a fake movement down. Got it, guys? And this is how we actually work with that. Okay. Next one of the yens, CAD yen also was Mr. Perfect for us this week. Did everything as expected, and now we have this triple, which we need to pay attention to. Well, it's a bit ugly here, but 1, 2, 3. So 1, 2 sells, okay, or range here and then look to sell top of the range. As long as the last high holds, we will be looking for sell opportunities. If the last high is broken, we are going probably higher, and this higher could take us, like with the OZN, this higher can take us to the next critical levels, and that will be 94 zone. Okay, so let's see for the CAD yen. Okay, let's continue, guys. Next one on the list, dollar Canadian. So far moving according to the plan. It was here. We have CPI this week, and we need to pay attention what's going to happen. Bad numbers, we're gonna crush. Good numbers, and this is most likely what's gonna happen. Okay, bullish corrections would be acceptable here, up to 38%, which is 127. From there, of course, we'll be looking to sell the rallies, but well, I would pay attention to possibility of a rally here. If we get this leg, then I would mark this trend line, break above it, and we can go long. In terms of days, we have a possible bearish bottom, 14, 15, 18, 19, all this week is a possible bottom for this pair, and then rallies. And meanwhile, the bearish correction continues, bearish correction. Why? Because we had this special cycle. And now it's correcting down, currently in a range, but the correction is valid. And once we identify this bearish cycle, we expected this move down. We go to the Scorpio, for example. Where is that? 15. No, where is that? Okay, here. 1 hour chart. Yep. That was our call top. We got the last Scorpio on the top of 126, which was our special cycle zone. And we said, cool. As long as we don't have this bottom, we are looking to look for sells. And we got it. We got beautiful sales opportunities. That was 1 hour chart, for example. 1, 2, 3, 4. 1, 2, 3, 4. And very nice 2 opportunities, providing us great sell moves. Then the bottom on the 4 hour chart was created. Game over. On the short term, we will be looking for new opportunities. Scorpio is an amazing play over and over again if you trade with the correct definition of the direction. For example, what we do here and what we do in the Traders Academy Club. If you are not yet a member of Traders Academy Club, consider that seriously. Day by day we define directions on trading reports and give you the edge. If you trade these directions, that's where your edge goes from here to here. You increase yourself the chances to trade right with the correct money flow direction. Very simple. What is the Traders Academy Club? Not going to talk about it right now. Below my video on the YouTube definition here, description on the bottom, below my video, there are links. Traders Academy Club is one of them. Click on it and you will see everything you need to see. Let's continue, guys. The euro versus the franc, holding this massive candle zone and now trying to break this trend line. So I would say here, if we manage to hold it and break these last important critical lows, break here, I would become a bearish for the second leg, something like that, and would aim the targets of this cycle. First of all, down to 114 zone here, then the 113 zone, and then 111.50. From my point of view, it could be one of the best. If it doesn't manage to break the level I just suggested, and just continues to climb, we are going higher to 118, 120 zone or so. And this is where my next pair comes in. This is the pound franc, another pair that is related on the pounds, of course. This is the critical zone. As long as we are below it, I expect one more drop lower. The best way to do that, of course, like with all other pounds, would be the break below the trend line and the last lows. Note, if a new trend line is developing, so for example like that, 1, 2, then we just improve the angle. And another trend line and lower lows break, and then we sell the rallies for 2 waves corrections down. Let's continue, guys. Basically, it's all the same with all the pound pairs. So I have nothing new to say here. So pound New Zealand is an interesting one because this one is still in a big range, which could provide nice opportunities. And now let's discuss a bit about the euro crosses. Euro New Zealand, one of my favorite. Why? Because it has a weekly double cycle and daily triple cycle, 1, 2, 3, and it had 2 false breaks, one here, one was before here, one was right here, and we got another one right here, this little tiny breakout. We got the convergence later on, Clásico de la Clásico. I expect a serious bearish move for this pair. We got triple move down here, which may be still creating, right? It could be special. From there, 2 waves up, and we are after sells. Every rally on this pair, I would be looking for sells, but keep an eye on the CPI of New Zealand in this week. Terrible CPI or very bad CPI could affect this pair to fly to new highs like 170, for example. Good numbers of the CPI, and this pair is going to continue lower all the way to the targets of here, here, and here. Eyes on it, guys. Really, really amazing pair opportunity. Now, if we go to the action zones, 1, 2, 3, all that are very powerful action zones for us. As per top, check out where you got the top, guys. See that? It was right on 12. 12 is one of the most powerful days for us statistically. Cycles, action zones, statistics. Do we need more as traders? Well, yes, setup. But when we know in advance on what days, on what levels we are going to look for things to happen, it's easier. We have the best starting point, and that's what we need as traders. Let's continue, guys. Gold and silver remain bullish as long as we are above the bottom. So from my point of view, as long as this low holds, every retrace is a buy. I believe we are going at least to the previous highs. Same with the silver. As long as this low holds, I remain bullish. I believe the previous high is the minimal target for this one. Oil, as long as this low holds, remain bullish. I expect 54 zone, which is here, maybe even a bit higher. Okay. And the natural gas is amazing one. Bottom of the range that was suggested. 2 waves down, right? Breakout, and here we are. As long as the last low holds, bullish, bullish, bullish. Every 2 waves down, basically like this. Breakout is a buy. Let's continue, guys. The next one, let's talk about indices who don't have yet for us lower lows. I don't have any normal reason for buys here versus monthly, weekly, daily divergences, but there is no reason for sells yet. We need lower lows, and the current lows for the Nasdaq would be, after all the false breaks in play, yep, this one. This is the low that has to be broken. Break below this low, we can start looking for the sells. As long as it didn't happen, we don't have a reason. Same with the S&P that needs to go below the last low of it right here. Break below the last low, we can start looking for the sells. We don't have it, we don't have a sell. And that's relevant for all of them. All of them. If it's the French CAC, it holds. If it's the German Nasdaq that just holds on this special cycle, they all need lower lows. Lower lows will provide a boost. Could that happen this week after the speeches? Definitely yes. Definitely yes. The autumn, the fall sells could come in play. Let's see. We don't need to rush, right? We need to play safe here. And the new addition onto our list, cryptocurrencies. I would pay attention to Dash, who seems to be very interesting by creating itself this triangle after the triple cycle here. 1, 2, 3. It might be a very nice movement in triangle and buy opportunities to come. So every 2 waves down, we are looking for possible buys. I would pay attention to LTC, of course. It looks amazing, if you ask me. We had 1, 2, 3, 1, 2, and flying. Every retrace is a buy opportunity to join the forces up. The Bitcoin surprised me. I was expecting for some forces here to hold it. Who am I? Who is a Bitcoin, right? They know better, of course. Wow. Let's remove the ray here. Let's make it a bit bigger, fatter, nicer for us. So we have 1, 2, and this is the third leg going on. 6,000 is the next critical psychological level. We don't have any real reason for sells yet. I would definitely keep an eye on this possible spike here. That's around the 6,000 or so. Spike here could start to provide sell opportunities. As long as we don't have any false breaks, nothing against, buy it is. Ethereum, beautiful one of my favorites. Keep moving inside the triangle. Technically based would be if we can get one more leg to the downside from here. So something like that, and then get ready for fly. Very interesting. And one of my loves, the Ripple. Mainly because it's cheap. Then again, we need every 2 waves down to be considered as a buy opportunity for long term. So that's all for this week, guys. It was, we have some really amazing opportunities. Previous week was one of the best recently, and that's all. As I said before, if you are not part yet of the Traders Academy Club, do yourself a favor, come to the club. You will never look back in your trading life. This is the place for you to make things for real. I would like to thank you very much for your time watching my video. I hope you enjoyed that. I hope you benefit from it. I hope you gain the knowledge and the quality you are looking for. If you did enjoy that, please click this beautiful thumbs up, the like button below the video. Leave your comment, leave your feedback. Your feedback, your words, your support, your appreciation is my motivation to keep doing these things for you guys. And if you have any question about any instrument or any setup or any of my systems, just let me know and I will reply right away. So once again, thank you for your time. I'm Vladimir Ribakov, Traders Academy Club, and I wish you a wonderful trading week. Bye-bye.